So welcome to this channel. Let's talk about your entry criteria, guys. How you can enter the market. Let's talk. It's not about your analysis now. It's not about your analysis. If you are taking trade one to one, and you are able to lose like 10 times of their account, and of your percentage, you are losing 10 times of whatever you risk. Let me say you are risking 5% of your account and you lose 10 times based on your strategy. Let's do the math. 5 times 10, that is 50% of your account. And maybe the strategy you are using is something that if you lose, you can lose 15 times before you even win one. So, and you are risking 5%. The emotions. The emotions that is coming when it comes to this. The emotions. So the entry here, let's come closer. Let's talk. The entry here, it's your number one. So that's why I said let me come and share this entry with you. You can use this with any indices pair, like you can use J40, German 40, or gold. At least if you win once, that one time which you won should be able to cover up your 3 weeks losses or 2 weeks losses, and also gives you your at least you have something to keep for yourself. No, when it comes to trading, you are using data and you're also paying the broker. So paying for the trading fees, also paying yourself, also being able to buy data again to access the market is your number one. So whatever you are doing, when you are trying to trade 1:1, 1:1, before you can do that it will really works for you. That means 1:1, you are taking this 1:1 in a bigger time frame. And for you to trade on a bigger time frame, you can spend 2 weeks, you don't even see an entry. Maybe when you finally see the entry 1:1, it become a loss for you. So how will you deal with this? But when you are trading, at least from the bigger time frame to a smaller time frame, it will give you what you really want for you to go move down to the next level. So that is what I said, let me share it with you guys today. Stay on this channel, subscribe, turn on notification bell. Let us get to the chat. Let me show it to you one after another. So for this, I'm going to be using J40 for this. This is indices pair. I'm going to be using J40. Then first, you have to make sure that the trend of the market is bullish, and you turn your candle from your normal candle. You turn your candle from the normal candle to high Kanachi candle, which is here. Then this moving average I'm using, this is 20 EMA. It also helps for you to know the trend of this market. This is 20 EMA. It also helps for you to know the trend of the market. So before anything, you have to know, you as well have to make sure you plug in, click on your candle twice. It will help you to open this interface. You click on events. This event will help you to select your section breaks, which is right there. So once you enable this section breaks, it will help you to separate the previous day and today. So if the market is bullish, you have to make sure that you are to take a buy trade only. Time frame here matters, 30 minutes time frame. So if this market, as you can see, this line right here was previous day, so you have to mark the high and the low of that day, which is right here, the way I marked. You marking the high and the low. If the high is being taken, you are to take a buy trade, and if the low is being taken, you are to take a sell trade right there. So that is what you are going to be doing. I hope it is understood. So let's move closer to where we are going to take our entry, because this very one is very far from us. So let's go closer. Right, the same thing happens right here. The same thing happens right here. You can see this was the previous day high. Here was previous day high, because you can see quite alright that another candle, another, you can see here, you can see this very day, this is another day, and this was other day. So let's keep going. So right now you can see this very day here, structure is broken to the upside. This still helps you to show you that this market is still bullish. So anything you are doing, you have to take a buy trade. So another thing you'll be using is your section indicator. Another thing you'll be using is your section indicator, like Asia range section indicator, which is on my chart right here. I'll enable it now. So I'm using the one by Lux Algo. You can see sessions. If you go to indicator right here, you search for, if you go to indicator, you type in sessions. Once you type in sessions, sorry, once you type in sessions, once you type in sessions, this interface you open. So you select sessions by Lux Algo right there. So then you click on done, you close the interface, you go back to your chart. So it will be on your chart. You don't need to have any setting on it, leave it the way it is. So right now, like I said, that this line here tells you about previous day. Another year tells you about the following day, the day you are in. So the previous day was, this was the high, and here is it. The market is still bullish. The market is still bullish. So the only thing you are going to be doing is for you to take a buy trade right here. So once the market, you have to make sure that after Asia sections is being, Asia sections is being closed, you have to be alert for you to be able to take a trade. So after the market has broken out of this section, of these sections, the market has coming out of these sessions, you should go to your M15, move down to M15. Once the market has broken out of that sessions, you move to your M15. So now everything will look okay by you. So let us move to our M15. We don't want this to be too long. Don't want the tutorial to be too long. Let me delete every other thing. Let me delete every other thing. Yeah. So once you move to your M15, here you can see that the market, you have to know that the market has to be bullish for you to do this. The market has to be bullish for you to do this. So the market was still bullish on your 30 minutes chart. So you can see that the market right here has broken structure to the downside. Once the market has broken structure to the downside, how do you know that the market is broken structure to the downside? Here is it. The market has to close bearish after the Asia section, which is this consecutive bearish candle right there. So after the market has come down with bearish candles, what you should be looking for is an engulfing candle. After this engulfing candle is what you will take into consideration. We had our engulfing candle right here. Not this one, not this one. This one doesn't engulf. You can see this is the high and this is the low of this red candle. So the only candle that engulf this very candle is this very one, is this one. All other candles are wicks. Is this one that closed above this very candle. So what you should do now is for you to mark this candle here. you have to mark this very candle here. So once you mark this candle, another step is for you now to move to your 3 minutes chart. Move down to 3 minutes, or let me say 1 minute. Move to 1 minute chart. This is because you want to be taking a trade that will give you a bigger RR. Even though you are able to take 2 good trades in a month, you should be okay with that. Even though you are taking 1 trade in a month, you should be okay with that. First is the trend of the market. Is very, very important. Another thing is you utilizing your Asia range indicator. Another thing is you make sure that your high Kanachi candle is either bullish or bearish. This will help you to filter all the noise in this market. So now I'm going to my so right now I have to go to my 5 minutes chart to look for an entry. You can see the where we marked. Yes, you can see where we mark. So here is the candle. Forget about, yeah. So this very leg right here, this very candle, this very one. Let's go to 1 minute. Let me show you what I'm going to show you. Because we are waiting for candle to come inside that range before we could do anything. If no candle has come inside it, then we don't do anything when it comes to this very strategy. I think we've been able. Let's zoom out. This was where we marked. Yeah, this was where we marked. You can see quite alright that this candle here is the leg that comes into that very candle we marked. Here was the leg that comes into it. So after this leg has come into this candle, another thing you should do is for you to look for an opposite candle. You should look for an opposite candle from this range for you to take a trade. The opposite candle now happens to be this very one, happens to be this one, and it's even engulfed. So you place your trade after that candle have closed. You place your trade this way. Once you place your trade, you can target 1 to 15. Your stop loss has to come beneath this zone a bit, and you go for 1 to 15. That 1 to 15 will take care of your 3 weeks of losses. I would have said you should go for 1 to 20. 1 to 20. Let's go for 1 to 20 because this is 1 minute. So you should expect a bigger RR from our 1 minute. So let's go for 1 to 20. 1 to 20 will be able to take care of your 1 month of losses. Yeah, to take care of your 1 month of losses. So we were able to achieve 1 to 20 at that point. This is to say, if you are risking $3 on a particular trade, you know what you are going to be getting. Risking $3 on this trade will easily make you $60. I think so. So this will take care of your 1 month of trading. If your last month was losses, this month you're able to catch one trade, it will able to abolish all your losses. Even if you are not making profit, at least you've gained back your losses in the market. So let's go back to our 30 minutes or 15 minutes and check. No, let's go back to 30 minutes and check the trend. After the trend, we can go to our M15 to look for a zone for us to take a trade. So another is still on this J is still on J. We are still on J40 pay based on the broker I'm using. So I'm using J40. J30 is not on my broker, so I'm using J40, and this is indices. With indices, you can really go far. If indices are broken out and it wants to move, it will move and give you what you need. So this is the high Kanachi candle helps you for the trend of the market. It will help to filter the noises for you to know where you belong. So the trend is still bullish. This is to say we are going to be taking a bullish trade once again. So let us go to our M15 and look for what we can do the another day right there. So let's go to our M15. If you are watched up to this point, don't forget to subscribe, turn on notification bell for more tutorial videos to come. Okay, so this is our M15, and yeah, you can see the Asia. You can see the Asia coming down with a consecutive bearish candle. We don't have any, we did not have any bullish candle yet, except when it comes to this very candle right here. You can see this candle close above this bearish candle. Here was the last bearish candle. That was a high and this was the low. At this aspect, we are only concentrating on the high. We are only concentrating on the high of this candle for the market to take off the high before we can make a decision, because it is a buy scenario. So let us go to our, so you marked this candle right there. You expect the market to come inside that candle for you to make a decision. So that was the candle right there. So let us go to our 1 minute again and see if we can have any, if we can make any decision on the market. So follow me. This video has already taken our time. Yes, I love it. Okay, all right, yes. So here we are. There is the zone we marked. Here we are, the zone we marked, which is this very one. Here was the line we marked right there. Note, we don't like a wick. If the market comes and pierce this line with a wick and then give us what we needed, the opposite candle, we are not interested in that. We want it to come and bleach through this very line, thereby closing with a candle body, not a wick, which is what happens right here. That is what happens right here on this very candle. It closes, it pierces through this line and it closes with a bearish candle, thereby giving us another candle right there. Indecision is give us another candle with another color. Like I said, that is where you place your trade right there. Pull your trigger right there. Your stop loss come below this wick right there, come a bit below the low. Then you go for your 1 to 20. 1 to 20 will take care of your 1 month. If the previous month was losses, this month with 1 to 20, you are good to go. You don't have to be greedy. You don't have to target 1 to 100. 1 to 50 will take care of your bill. If we are risking 2 here, 2 times 20, I think that will gives you 210, 20. So that will give you $40. So with your 1 to 20 right there, you know what you got. If you are risking $5, you make more than or up to $100 or more. I think so. So you've gotten your 1 to 20 right there. So let us go back again to our London, to our 30 minutes. Sorry, let's go back to 30 minutes and see if we can have another entry. Because like we said, no strategy is 100%, but what you should do is for you to be able, you should be able to hold yourself. Whenever you have a running trade, you should allow it to run, because losses must always come. So this is our 30 minutes. As we can see, the market is still bullish. It hasn't broken structure to the downside yet, so it is still bullish. Then let's go to M15 and see if we were able to take a trade. Go to our M15 and do the same thing over and over again. Okay, so this day, you see this day, as the market come down bearish candles. After all these bearish candles, then we have a bullish candle, which is this very candle that engulf this very one. We have a bullish candle that able to engulf this one. Now we are dealing with engulfing pattern. These engulfing patterns are very, very beautiful and they are very, very strong in the market. When you see one, don't joke with it. So here is what it is. We mark the candle. Like I said, we are interested on the high, not the low, because this is a bullish trend. So we are only interested on the high, not the low. So you mark the high. After marking the high, let us go to our 1 minute and look for our entry. So follow me to 1 minute. Don't forget to subscribe. I said subscribe. I said subscribe. So let's go. The video is long enough. So for me to go to gold to analyze gold again, it will be too much. I think I'll end it here. You guys can go to gold and practice this same strategy. So I have to straighten this to the future. You can see, have to straighten it to the future. The line is not, have to straighten it to the future. Okay, so this is another thing. You can see this market here, it closes with wicks. It closes with wicks and still give us this candle. Like I said, we are not interested on wicks, but that doesn't mean it can still go in your direction. It wicks up and give us the opposite candle. That doesn't mean it can still go, it can still, but you have to stick to your rule when it comes to this. So it closes with wicks and give us opposite candle, which if you wish to take this trade, you can still do it. You can still do it, and your stop loss go beneath the previous, where the momentum was coming from. So you can still as well target 1 to 20. It may, that just it, 1 to 20 or whatever you want to. And we've gotten our 1 to 20 right there. Is this not beautiful? This is beautiful. So go to the chart. This is the photo I'm using. Implement this yourself. Implement it on gold charts. Those indices pair are what really gives you the money, because for you to make money from the forex pair, the thing, it moves so slow. So with the indices, at least 1 month, if you are able to win a trade in 1 month, even though it is one trade or two trade, as you can see, this very month, this was three good trades. So if you're able to reach $3 here, you know how much has come down when it comes to this, which is one of the trade which I took, which is the last one, has not met our entry criteria. But if you are to take this right trade, you'll be able to win 3 trade. So guys, this is what I say. Let me open it up to you guys. This simple strategy can make you in the long run to quit your job, you know. So subscribe. That's all. Thank you for watching.